Oh man, so Bitcoin holding the day green, up 3.16%. But in this, we're talking about the big Ethereum deleveraging. We know that part of the reason we've had this big drawdown over the last few weeks or so is around the Ethereum ecosystem, whether it's to do with the staked ETH, whether it's to do with major companies falling to the downside. Celsius, we've now heard from 3 Arrows Capital. We know all these things going on is partly due to this huge deleveraging we're going through on ETH. So we're going to look at a whole bunch of on-chain metrics. I'm also going to on the Bitcoin price, because as you can see here from my video a couple of hours ago, we were creating this double bottom pattern on Bitcoin. As you can see, you have this one bottom, second bottom, and we're waiting for the breakout. We had an initial breakout here on the 5-minute chart. We fell back in, we're now gone back up, and now we're going to see, are we going to get this move to the upside, which potentially we could be trading all the way up to about 21,651. So if we get the confirmation above this line about here, which is the 20,000 psychological resistance, we could get a good move here up to our technical price target. Of course, trade this if you're very, very experienced and you know what you're doing with risk management and stop losses. Definitely trade this using BYBIT. You guys can use BYBIT. Please don't get yourself wrecked, guys. There's some crazy leverage options on here for you guys to get wrecked. So if you don't, please stay away and don't trade this. But before we get into off with a little bit of Twitter hopium, and what I wanted to do is just give you guys some perspective, because we're on a Sunday here. It's been a tough week, and we need to get ourselves prepared for another tricky week coming up. And I wanted to show you this, because this was going back all the way to July 2011, where you saw this post here saying Bitcoin will never ever reach $20 again. Fast forward, you then had Bitcoin in the Washington Post. Bitcoin falls below $200, the lowest price since 2013. Okay, then fast forward, you then have Bloomberg posting Bitcoin falls below $2,000, right? Oh no, horrible. And then fast forward again, Bitcoin plummets below 20,000 for the first time since November 20. So in other words, we see this time and time again. History doesn't repeat itself, but it most certainly does rhyme. And one thing you can notice from there is, have you noticed how the screenshots went from some random forum post all the way up to now Bloomberg and the New York Times covering it on the front of their website? So clearly crypto is making progress, and there's no reason for us to feel down about this as long as we got a long-term horizon and we hold our conviction. So also take a look at this, because this will give you a good idea. I mean, you can just simply look at the history of Bitcoin. Every time we're up, oh, Bitcoin's a bubble. Every time we're down, Bitcoin's dead. Oh, look, Bitcoin's in a bubble. Oh, look, Bitcoin's dead. Oh, look, it's a bubble. Of course it's a bubble, guys. Sell. It's a bubble, guys. Sell. Oh, no, crypto's dead. Oh, it's a bubble. Oh, dead. Oh, bubble. Yeah, we've seen it all. Time and time again. This is just people trying to get you to sell. That's it. We know crypto is limited. We know Bitcoin is limited, and they want you to sell so they can pick up those coins. But we're not going, guys. And finally, just to remind you, we've got this scenario, right? This is, I'm sure all of you guys in the crypto space are feeling this right now. When you're at 68,000, you go, I wish I bought earlier. But then when you're sitting at 20, it's a scam. It's going to zero, right? And friends, I made the video yesterday saying, is crypto a scam, right? A lot of people will be messaging you and saying, I told you so. I told you. Why are you wasting all your money in crypto? Forget those people, guys. They just won't understand. They've got another opportunity now, but they still won't get it. We just need to crack on with what we know. So now we're going to run through some on-chain metrics for Ethereum, because Ethereum is huge deleveraging, and I want to run you through some interesting takes using some charts from Glassnode. And the first one I want to explain is you've had a huge drawdown on price from Ethereum, right? We're 75.2% down here on the Ethereum price. And this screenshot was taken a little while ago, so call it at $1,030. Obviously, we fell below $1,000. Now, to put that into perspective, we were 94% down in the 2018 bear market. So if we were to go the same stretch down, the same percentage down, we still do have some more movement to the downside. And then if you look at how long we would draw down from here, in the 2018 to 2019 bear, we were down here for a long period of time. So even if we do come down, maybe we're going to have suppressed valuations for a little while. So we need to keep an eye on that as well. Now, the next thing, and this is something we've been monitoring for a while on this channel, is the gas prices and transaction volumes have been declining for a while on Ethereum, okay? So ever since the November all-time high on Ethereum and Bitcoin, where Bitcoin ran up to 69,000 November 2021, we've seen a decline. This pink line is your transaction count. The blue line is your mean gas prices. These are falling, and as you can see, the difficulty bomb is climbing ahead of the ETH 2.0 mode. So we're seeing a slowing demand profile for the users of Ethereum. Now, if we also take a look at this, which is your Ethereum gas usage by transaction type, and the two transaction types we've got highlighted here in the green are DeFi, and the second one are your stablecoins. And what you'll notice here is since this period here, just dating back here to the May 2021 sell-off, you've seen that DeFi and stablecoins as a percentage of all gas transactions on Ethereum have been falling quite significantly. So in the DeFi summer, you had 31% of the usage was in DeFi and 13% in stablecoins. That's fallen to 10% in DeFi and 4% in stablecoins. So we're seeing the demand profile significantly slowing and changing on Ethereum, partly because of this deleveraging, which I'm going to explain shortly. Now, if we take a look at this, let's see if we can get zoomed out here on this chart. Where were we? We were on... Right, this one. Let's take a look at this one. So what you're seeing with this one is this is the emergence of NFTs. So in mid-2021, you saw the emergence of NFTs as highlighted by the green. It held its dominance at about 24 to 34% of all ETH gas fee transactions. And now we've seen that decline, of course, during this deleveraging. We're seeing this decline now down to 15.6% from about 34%. So we're seeing the demand profile again in NFTs fall. If we look at the NFT transaction volume, you'll see that's fallen significantly as well. At the peak, you were more than 300k Ethereum per day. By the way, we're looking at here the Ethereum, OpenSea in the blue, and we're looking at LuxRare in the orange. And now you can see substantially on the right-hand side here, we're not even within the 50k to 100k band. The daily transactions here on NFTs has significantly fallen to the downside. Moving on, we can then look at the total value locked, right? And the total value locked has really taken a big drawdown. I mean, we're talking a huge sell-off of, I've got the stat here, I think we've fallen 124 billion in total value locked fallen on Ethereum in just 6 weeks, guys. That's insane. 94 billion done during this big 46% drop off after the lunar crisis. We then had this recent issue with everything going on with staked ETH, Celsius, 3 Arrows Capital. That's another 27% off in this deleveraging, which is what we're speaking about now. So a huge 124 roughly $billion in total value locked just fallen in these two events which we've seen. And if you look at the percentage drawdowns in total value locked, the May 2020 fall due to lunar, that was only equaled by the May 2021 sell-off in the summer when Bitcoin fell to 29,000. Okay, so we saw 37.5% lost in 7 days. This time we've seen 46% lost in 2 days, and we're seeing a similar drawdown now, getting closer and closer to this level happening right now with the latest fall. So that's closer to about 27% in 7 days at the moment. So definitely the theme is very clear. We're seeing less total value locked. We're seeing a lot more deleveraging. And there's two reasons we're seeing a deleveraging. The first major deleveraging is just people are wary of what's going on, right? They're taking their leverage away. The other one is people are getting liquidated. So some of this is forced and some of this is choice by people who are switched on and realizing they need to get out leverage right now. So we're seeing this happen. The other thing worth looking at is looking at the aggregate stablecoin supply. Now, the interesting point to note here with the supply is if you looked back to the redemptions, we've now seen 9.9 billion of redemptions seen since May the 1st, okay? So this is crazy, this is insane. And if you look at it, you've got 13 billion USDT, DAI 2 billion, but then a lot more positive movement is going towards USDC. And we know this, right? This USDC has a little bit better collateralization, collateralization setup than USDT, right? So USDT isn't as clear with their audit trails of their cash and cash equivalents. At least USDC says it's all in cash and cash equivalents, which is good. So what we're seeing is 13 billion in redemptions on USDT, but then USDC has actually gained 5 billion of that. Binance BUSD is sitting at just about flat, and we're seeing DAI has lost 2 billion in redemptions as well. So far of stablecoins changing dramatically. And it's not just that. The other thing to notice is the market cap of stablecoins continues to be impressive versus Ethereum. Now, if you look historically, the market cap of the top 4 stablecoins, okay, so those are the top 4 stablecoins we were just looking at, used to be at about 50% of Ethereum's market cap. Now you can see it getting a crossover where Ethereum's market cap is coming down, the market cap of stablecoins is going up, and now crossing past Ethereum's market cap, which is very, very interesting indeed. Now, this is where things get interesting, because now we need to look at who is sitting in a realized loss. And we've done this before. It's very interesting to see what is the user behavior in Ethereum. And right now, two types of users. The first one is somebody who's sitting on Ethereum. And by the way, these are for long-term holders, anybody who's held Ethereum more than 5 months. You can see that the realized Ethereum price is 1730. So anybody less than 1730 is in a huge loss. So when we were sitting at $900 the other day, those people are in a huge loss on their Ethereum, okay? Even at this market price, of 1200 when this graph was taken by Glassnode, they were at a huge loss. The other group of people are those who have left their money in ETH 2.0. Because what you can do is you can, when they locked into ETH 2.0, so you can see what price was. And what you will notice for those guys, they've got an aggregated realized price of 2,400. And the price is sitting at $900 like it was the other day. They are in huge losses here on Ethereum. Okay, now the other thing, this thing is very useful to look at, which is supply in profit. So if you look at the 2018 to 2020 bear lows, 23% of all Ethereum in supply was in profit, okay? And 2.8% of addresses were in profit. If you look at now, you have 45% of Ethereum supply still in profit, and you have 51% of addresses still in profit. So I don't want to be a bearer of, bad news. But if this is any indication to go off, there is more downside to be seen. There's more capitulation to be had because these were the lows from the previous bear market. 23% only of people in profit and only 2.8% of addresses, 2.8% versus 51. This is capitulation now. The previous bear markets had much worse in the great deleveraging. So again, this is one of the reasons I can't give you guys hopium of a massive recovery to the upside. Yes, I can show you trades and entries so we can make a quick little bit of money here using BYBIT and doing some trading with good risk management and stop losses. But for the long-term view of this, when can we actually recover? There's a lot more to go, right? The wider macroeconomy needs to improve. We need to deleverage. We need to flush out the weak hands. And that's the key. We need to flush out these weak hands. We need them to capitulate so that we can now go up with stronger, harder, more diamond hands. You don't want these people in. These are healthy, natural deleveraging. This happens in traditional finance all the time, and it's happening right now in traditional finance as we speak. Values get compressed, leverage gets it gets squeezed out of the system, and when you've got the pure hardest stone in the middle, then you're ready to rise back up. We've got a couple more graphs for you, and this is the net. This is the net unrealized profit and loss. And the thing worth showing you here, again, is there was more capitulation dating back to September 18. Look at this final capitulation leg you had down. We're nowhere near here. Okay, so the long-term holders, those who are holding more than 5%, they're now holding losses of about 23% of market cap. But look how far down this went. Much bigger difference here. This was the final capitulation leg before you could get some sort of a semblance of recovery in the previous bear market. So we're just starting here. So I don't want to sell you a false narrative that we're good to go, we're going to get a V-shaped recovery. We're not at all. And everybody who tells you we are is probably not making the most sense right now. And finally, if you take a look at here, you can see the same thing, right? If you're looking at where people are actually realizing those losses, you could see there was a huge amount of realized losses here in the summer. You saw some, and then during the lunar, you saw 2.85 billion of realized losses. In other words, people, and they capitulated and they sold 2.85 billion of that during the lunar crash, and you're seeing a similar amount, 2.16 billion, happening now. Okay, during this great, again, people are taking losses, they're feeling it, and it means that we are getting to the bit where there's pain, but there could be a little bit more just to squeeze that out before we're ready to run to the upside. So there you have it, guys. It's clear, right? The ETH holding base right now is significantly underwater. They're in some significant unrealized losses, and the run-up of the bear market of 2020 and 2021 did create a lot of bad habits, right? We saw the run-up of NFTs. We know there were many great projects, but then many more, right? 99% of projects were just trash, right? We saw the same with many crypto projects. We saw meme coins. We saw all these things running up, and it's just a sign of too much, an excess liquidity of money in the market. And this happens in traditional finance as well. There's nothing wrong with it. When you're in a bull market, you can see the froth starting to come at the top. You see companies commanding crazy valuations, even though they have no revenue, no profit. And it's the same for crypto. You get these random meme coins commanding crazy market cap. You get these random NFTs with huge ETH price floors, and you got to flush it out. You got to flush it out, get those weak hands out, get rid of the projects with no substance, and then you're ready to go up to the top. And nobody can hide from a bear market. Whether you're a weak project, whether you're a weak NFT project, a coin, a crypto hedge fund like we've seen, an exchange, everybody is up. A retail investor, a sophisticated investor, everybody is available to get exposed during a bear market, because you need to get rid of those weak ones to be able to run to the upside. So guys, don't forget, we've got this interesting pattern to keep an eye out here on Bitcoin. We'll be keeping an eye on this to see how we get on. If we fall to the downside, then there's not much of an opportunity for a long, but if we can start getting back above 20,000 and clear past these peaks where we got rejected here and here, that's a nice long position for you to trade all the way up to about 21,600. So again, guys, you with me using the link in the description to BYBIT, they'll give you up to 4,200 odd dollars in bonuses, and you can trade with just that bonus, so it's no loss to you guys. And again, practice your proper risk management with stop losses, with take profits. Don't play with margin, don't play with leverage. You can trade responsibly, just like I am here in this kind of boring, painful market, right? I continue to dollar cost average in on Bitcoin and Ethereum, even though the picture is bleak and there is more risk to the downside. I continue to nibble just to keep my psychology in check so I don't get any of that FOMO. And that's pretty much what I'm doing right now. So thanks for watching this video, guys. Don't forget to hit up the like button and subscribe. I'm going to link up an interesting video for you to watch here, and I'll see you in the next one.